Welcome to The Explainer. Today, we're going to tackle one of the biggest financial hurdles out there, buying a home. We're looking at a company that's built a model specifically for people who, well, the traditional system just kind of leaves behind. I mean, does owning a home ever feel totally out of reach for you? For so many of us, the traditional path is it's full of hurdles. You need a sky-high credit score, a massive down payment, this perfect, unbroken employment history. It's this long checklist that can make that dream feel more like a fantasy. So who exactly is getting left behind in today's market? Well, the truth is, the whole idea of what a potential home buyer looks like has changed. A lot. Okay, take a look at this list. If you see yourself in any of these groups, you are so not alone. Think about it, the rise of the gig economy, or maybe an unexpected life event that just tanks your credit. Or maybe you have specific financial needs, like Sharia-compliant financing. The bottom line is, traditional mortgages, they just weren't built for the way we live and work now. But what if there was a different way? This is where this whole explainer gets really interesting. We're going to dive into a company called Trio, and they offer a whole set of alternative financing options that are actually designed for this new generation of buyers.
Okay, so let's really get into it. Their entire model, their whole reason for being, is to open the door for people who've been shut out by traditional lending. It's not about trying to force people into an old, outdated system. It's about building a brand new one from the ground up.
But how does it actually work? What's the secret sauce? Well, it's not some one-size-fits-all deal. Trio has 3 core programs, and each one is specifically designed to tackle a different barrier to owning a home. So this table here lays out the 3 main paths they offer, and you can see they're pretty different. You've got a long-term purchase contract, then there's a lease that can actually turn into ownership, and finally, a specific no-interest agreement for folks with unique financial requirements. Let's break each one of these down. All right, first up, we have the fixed-rate contract. The easiest way to think about this is like a direct purchase agreement. Trio basically acts as both the seller and your lender. It's a 40-year term, and the big thing here is that you get equitable ownership right from day one. Now, the second path, this one's really designed for people who just need a little more time to get their ducks in a row. It's called the convertible lease. It starts out as a normal 5-year lease, but, and this is the absolute key, after just 18 months of on-time payments, you get the option to flip a switch and convert it into a full-on purchase contract. And then there's the third option, which offers a really specific solution. It's called the buyout agreement. This is a 40-year, no-interest financing model. The way it works is kind of like co-ownership. You gradually buy out Trio's share of the home over time. This makes it completely compliant with international Sharia standards. Okay, so all of this sounds great on paper, right? But the real question is, does it actually work for real people with real-life challenges? Let's take a look at how this all plays out for actual customers who've been through the whole process. Let's start with this quote from Carolyn. Now get this. She's a real estate agent, someone who is deep in the industry, right? And even she felt totally locked out of the market. Her story really just goes to show you how widespread this problem actually is. Or let's talk about Patricia. Her family got hit with some really unexpected medical emergencies, and you know what that can do to your finances. It sent their credit score plummeting. For any traditional lender, that's it. Game over. An immediate no. But here's the crucial part. The program gave her the breathing room she desperately needed. She was able to live in her home, get back on her feet financially, and in just over 2 years, her credit score jumped by 100 points. That was the key that finally allowed her to purchase the house. Then you have a story like Clayton's. He's a military veteran, and after a really tough transition back to civilian life, which led to a bankruptcy and a foreclosure, he found it was just completely impossible to get a traditional loan. And check this out, because this number really illustrates the financial power of a program like this. In just under 2 years, his home's value grew by over $38,000. That's real, tangible equity that he was building. Money that otherwise would have just vanished into a landlord's pocket as rent. Okay, so what about non-traditional work? I mean, so many of us are freelancers, are gig workers now. Here we have Anthony and his wife, Tiombe. He had inconsistent income, and together they had basically no credit history. For a typical bank, that's not one, but 2 major red flags. And the result for them? Almost $50,000 in earned home equity in under 3 years. This is so important because it shows it's not just about getting a house. It's about being able to build a secure financial future for your family, even if you have an unconventional career path. But let's be real, life is unpredictable, right? A long-term commitment isn't always the right move for everyone. So what happens if your plans change? This is another critical piece of the puzzle. The model actually accounts for those unexpected turns. Let's look at Stephanie's story. She used the program, got into a new home, but later on she decided she just didn't want to juggle two properties. And instead of being trapped or facing huge penalties, she was able to just walk away with a small, totally predictable move-out fee. Think of it like a built-in off-ramp. So, after looking at the mechanics and hearing all these real-world stories, what's the big takeaway here? I mean, what does a model like this truly offer, beyond just handing you the keys to a house? When you really boil it all down, what these alternative models provide is two crucial things: time and flexibility. They give people the time they need to build up their credit and their savings. And get this, all while their purchase price is locked in, protecting them from inflation. And they offer the flexibility to either go through with the purchase or just move on if life changes. It's about opening that door for a whole new generation of buyers. And all of this leaves us with one final big question to think about. As the very nature of work and income and family continues to change so rapidly, is it possible that flexible, adaptive financing models like this won't just be a niche alternative? Could they actually become the new standard for homeownership?